the XRP ETF the future of crypto investing? Yo, ETF chat fam. Have you heard the whispers on the crypto streets? The XRP ETF, it's coming, or is it? Today, we're diving deep into this mysterious beast, uncovering the pros, the cons, and the whole lot of unknowns. Buckle up, because this ain't your typical financial fluff. We're talking potential moonshots, regulatory hurdles, and everything in between. So, smash that like button, hit subscribe, and let's chat XRP ETF. First things first, is there even an XRP ETF out there? Nope, not yet. But hold your horses, crypto cowboys. The SEC lawsuit, the regulatory drama, it's all swirling around this potential game changer. So, what if it does launch? Could it be your golden ticket to crypto riches? Or is it just a recipe for disaster? We're about to crack open the truth vault, fam. We'll break down the risks, the potential rewards, and the expert opinions that'll leave you saying, whoa, that's what I needed to know. So stay tuned, because in the next few minutes, you'll be an XRP ETF Jedi Master, ready to conquer the crypto markets like a boss. Let's get chatting. Question 1. What is the objective of the XRP ETF? While there is currently no approved XRP ETF in the United States, there are proposals and significant interest in launching one. Here's what we know. Potential objectives of an XRP ETF are: 1. Increase mainstream adoption. An ETF would provide a regulated and familiar investment vehicle for institutional and retail investors, potentially leading to wider adoption and increased demand for XRP. 2. Boost XRP price. Increased demand could push the price of XRP upwards. 3. Enhance liquidity. An ETF could act as a liquidity hub, facilitating easier buying and selling of XRP. 4. Promote utility. By encouraging active usage of XRP, an ETF could strengthen its overall utility and perceived value. However, several hurdles exist here. 1. Ongoing SEC lawsuit. The SEC's lawsuit against Ripple, alleging XRP is a security, is a significant obstacle. A favorable outcome for Ripple could pave the way for an ETF. 2. Regulatory uncertainty. The regulatory landscape surrounding cryptocurrencies is still evolving, and regulators may need to provide clearer guidance before an XRP ETF can be approved. Question 2. What criteria are used to select the assets held within the XRP ETF? As there is no currently approved XRP ETF, it's impossible to definitively say what criteria would be used for asset selection. However, based on existing ETF structures and industry best practices, here are some potential criteria that could be used. Liquidity. The ETF would likely require high liquidity XRP-related assets to ensure smooth trading and minimize price discrepancies. This could include 1. XRP itself. The core holding would likely be XRP tokens. 2. Other XRP-based tokens, assets closely tied to the XRP ecosystem, like utility tokens or security tokens issued on the XRP ledger. 3. Derivatives. Futures contracts or options based on XRP, could be included for diversification and hedging purposes. Diversification. The ETF might aim to diversify beyond just XRP itself to manage risk and offer exposure to different aspects of the XRP ecosystem. This could include 1. Companies involved in XRP development, enterprises building on the XRP ledger, or using XRP in their products, could be considered. 2. Cryptocurrency exchanges, platforms with significant XRP trading volume, could be included for indirect exposure. 3. Blockchain-related infrastructure, companies providing services like wallets, custody solutions, or oracles could be represented. Investment objectives. Depending on the target audience, the ETF might focus on different objectives. For example, 1. Growth-oriented. Prioritize assets with high potential for future appreciation, even if they have higher risk. 2. Income-generating. Include assets that provide regular income, like tokens with staking rewards or dividend-paying companies. 3. Value-oriented. Focus on assets with low valuations and strong fundamentals. Regulatory compliance. The ETF would need to comply with all applicable regulations, which could influence asset selection. For instance, some regulatory frameworks might restrict certain types of assets or impose specific holding limits. Transparency and disclosure. The ETF provider would need to clearly disclose the selection criteria and the composition of the underlying holdings to ensure investor confidence. It's important to remember that these are just potential criteria, and the actual selection process would depend on the specific ETF provider and its goals. Remember, no XRP ETF exists yet, and any information about its composition is speculative. Question 3. What is the underlying structure of the ETF? Is it physically backed by XRP, or does it use derivatives or swaps? It's impossible to say for certain what the underlying structure would look like. However, based on existing ETF structures and industry practices, here are two possible scenarios for how an XRP ETF could be structured. 1. Physically backed ETF. 1. This structure would hold actual XRP tokens in proportion to the number of ETF shares outstanding. 2. This offers transparency and potentially lower fees compared to derivative-based structures. 3. However, it requires the ETF to securely store and manage large amounts of XRP, which can be complex and expensive. 2. Derivative-based ETF. 1. This structure would use derivatives like futures contracts or swaps to track the price of XRP. 2. This can be more efficient and cost-effective than physically holding XRP. 3. However, it introduces counterparty risk, as the ETF relies on the derivatives contracts to perform as expected. 4. Additionally, derivative-based ETFs might not perfectly track the underlying asset's price due to tracking errors and fees associated with the derivatives. Other possibilities are a hybrid approach combining physical and derivative holdings is also possible, depending on the specific goals and regulations. Question 4. What is the underlying methodology for rebalancing the XRP ETF's portfolio? Based on existing ETF structures and industry practices, here are some potential methods that could be used here. Periodic rebalancing. 1. This is the most common approach, where the portfolio is rebalanced at predetermined intervals, e.g., quarterly, annually, to maintain its target allocation. 2. The methodology could involve buying or selling assets to bring their weights back to their desired percentages based on the fund's investment objectives. Threshold-based rebalancing. 1. This approach triggers rebalancing only when the weight of an asset deviates from its target by a predefined threshold, e.g., 5%. 2. This can be more cost-effective than periodic rebalancing, but may lead to larger adjustments when rebalancing finally occurs. Intraday rebalancing. 1. This involves continuous buying and selling throughout the trading day to maintain the target allocation. 2. This can minimize tracking error, but can be more complex and expensive to implement. Considerations for an XRP ETF. 1. Liquidity. The rebalancing methodology would need to consider the liquidity of the underlying assets, especially for less liquid assets like certain XRP-based tokens or smaller companies. 2. Trading costs. Frequent rebalancing could incur significant trading costs, which would impact the ETF's performance. 3. Tracking error. The chosen methodology should aim to minimize the difference between the ETF's price and the net asset value, NAV, of its underlying holdings. 4. Regulations. Regulatory requirements might influence the rebalancing frequency or methodology. Question 5. What is the purpose and utility of XRP in the Ripple network? How does this impact its long-term investment potential? Within the Ripple network, XRP serves several key purposes. 1. Transaction facilitation. XRP acts as a bridge currency, facilitating the exchange between different currencies and assets on the network. This allows for faster and cheaper cross-border transactions compared to traditional methods. 2. Liquidity provision. XRP provides on-demand liquidity for transactions, eliminating the need for pre-funding accounts with various currencies. This improves efficiency and reduces costs for financial institutions. 3. Settlement currency. XRP can be used to settle transactions on the RippleNet, ensuring swift and secure settlement without the need for intermediary currencies. 4. Store of value. While not its primary function, XRP can also be held as a store of value, similar to other cryptocurrencies. Impact on long-term investment potential. The utility of XRP within the Ripple network influences its long-term investment potential in several ways. Positive factors. 1. Increased adoption. Wider adoption of RippleNet by financial institutions could lead to increased demand for XRP, potentially boosting its price. 2. Efficiency gains. If XRP facilitates faster and cheaper transactions, it could become a valuable tool for businesses, potentially increasing its usage and value. 3. Regulatory clarity. Clearer regulations surrounding cryptocurrencies, including XRP, could attract more investors and improve its long-term stability. Negative factors. 1. Competition. Other cryptocurrencies and payment networks offer similar functionalities, posing competition for XRP's adoption. 2. SEC lawsuit. The ongoing lawsuit between Ripple and the SEC regarding XRP's status as a security creates uncertainty and could hinder its adoption and price growth. 3. Market volatility. The cryptocurrency market is inherently volatile, and XRP's price could fluctuate significantly, making it a risky investment. Overall, XRP's long-term investment potential depends on various factors, including its success within the Ripple network, regulatory developments, and overall market trends. Question 6. What risks are associated with investing in the XRP ETF, and how are they managed? It's important to remember that no XRP ETF currently exists within the United States or any other major financial market. However, considering the potential future launch of such an ETF, it's crucial to understand the potential risks involved and how they might be managed. General cryptocurrency risks. 1. Volatility. Cryptocurrencies like XRP are inherently volatile, meaning their prices can fluctuate significantly and unpredictably, leading to potential losses. 2. Regulation. The regulatory landscape surrounding cryptocurrencies is still evolving, and changes in regulations could negatively impact the market and individual assets like XRP. 3. Security. Cryptocurrency exchanges and wallets are vulnerable to hacks and security breaches, potentially leading to theft of your holdings. Specific risks to an XRP ETF. 1. Underlying asset risk. The performance of the ETF would be directly tied to the price of XRP, inheriting its volatility and potential risks. 2. Tracking error. If the ETF doesn't perfectly track the price of XRP due to its chosen structure or fees, investors might experience returns different from the underlying asset. 3. Counterparty risk. If the ETF uses derivatives to track XRP, it relies on the counterparties to fulfill their contractual obligations, introducing potential risks if they default. 4. Management fees. Like any ETF, the provider will charge management fees, which would reduce your overall returns. 5. Liquidity risk. If the ETF trades on a less liquid exchange, or holds less liquid assets, it could be difficult to buy or sell shares quickly and at desired prices. Potential risk management strategies. 1. Diversification. Invest in a diversified portfolio that includes other asset classes beyond the XRP ETF to mitigate concentration risk. 2. Dollar cost averaging. Invest smaller amounts regularly over time instead of investing a lump sum, potentially reducing the impact of volatility. 3. Stop loss orders. Set stop loss orders to automatically sell your shares if the price falls below a certain level, limiting potential losses. 4. Research and due diligence. Thoroughly research the specific ETF, its structure, fees, and underlying holdings before investing. 5. Consult a financial advisor. Seek professional advice to understand your risk tolerance and develop an investment strategy suitable for your individual circumstances. Question 7. What market trends or developments could impact the performance of the XRP ETF? As mentioned previously, there is currently no approved XRP ETF in the United States or any other major financial market. However, considering the potential future launch of such an ETF, here are some market trends and developments that could impact its performance. Positive factors. 1. Increased adoption of RippleNet. Wider adoption of RippleNet by financial institutions for cross-border payments would increase demand for XRP, potentially boosting the ETF's price. 2. Regulatory clarity. Clearer regulations surrounding cryptocurrencies, including XRP, could attract more investors to the ETF, increasing its liquidity and stability. 3. Growing institutional interest in crypto. If more institutional investors enter the cryptocurrency market, they might choose the ETF as a convenient way to gain exposure to XRP, driving up its price. 4. Positive developments in the Ripple vs. SEC lawsuit. A favorable outcome for Ripple in the ongoing lawsuit could remove a major uncertainty surrounding XRP and boost investor confidence in the ETF. 5. Technological advancements. Innovations in blockchain technology and the Ripple network itself could enhance the utility and efficiency of XRP, leading to increased demand and ETF price appreciation. Negative factors. 1. Market downturns. If the cryptocurrency market experiences a broader downturn, the XRP ETF could suffer significant losses even if its underlying asset remains stable. 2. Competition from other cryptocurrencies and payment networks. If alternative solutions gain traction and outperform XRP, the ETF's performance could be negatively impacted. 3. Negative developments in the Ripple vs. SEC lawsuit. An unfavorable outcome for Ripple could create uncertainty and hinder the ETF's adoption and price growth. 4. Increased regulatory scrutiny. Stricter regulations on cryptocurrencies could limit the ETF's accessibility and dampen investor enthusiasm. 5. Security breaches or hacks. If the ETF or its underlying infrastructure experiences security issues, it could damage investor confidence and negatively impact its performance. Question 8. What mechanisms are in place to ensure fair pricing of the XRP ETF's shares? It's important to remember that no XRP ETF currently exists within the United States or any other major financial market. However, considering the potential future launch of such an ETF, here are some mechanisms that could be in place to ensure fair pricing of its shares. Market forces. 1. Supply and demand. The ETF's share price would be determined by the market forces of supply and demand. Authorized participants would create and redeem ETF shares based on investor demand, influencing the price to match the underlying net asset value, NAV. 2. Arbitrage. Market participants would constantly compare the ETF's price to the NAV of its underlying assets. If any discrepancies arise, arbitrage opportunities would emerge, incentivizing investors to buy or sell shares, pushing the price towards fair value. Transparency and disclosure. 1. NAV calculation and publication. The ETF provider would be required to calculate and publish the NAV of the underlying assets regularly, e.g., daily, providing investors with transparency into the ETF's intrinsic value. 2. Independent audits. The ETF's financial statements and NAV calculations would be subject to independent audits by reputable accounting firms, further ensuring accuracy and transparency. Regulatory oversight. 1. Exchange listing rules. The ETF would likely be listed on a regulated exchange, subject to listing rules that aim to prevent market manipulation and ensure fair trading practices. 2. Securities regulators. Regulatory bodies like the SEC in the US would oversee the ETF's activities and enforce securities laws to protect investors from fraudulent or manipulative practices. Additional mechanisms, depending on the specific structure. 1. Creation or redemption baskets. The process of creating and redeeming ETF shares could involve baskets of assets that closely mirror the NAV, reducing potential pricing discrepancies. 2. Market makers. Designated market makers could provide continuous bid and ask quotes for the ETF, improving liquidity and facilitating efficient price discovery. So, there you have it, folks. The XRP ETF, a potential game changer in the crypto world, but with a hefty dose of uncertainty thrown in. Remember, this isn't financial advice, and navigating the cryptosphere always comes with risks. But hey, knowledge is power. But hey, if you're feeling adventurous and the XRP ETF sparks your curiosity, then who am I to stop you? Just remember, approach it like a Wild West adventure, exciting, potentially rewarding, but definitely not for the faint of heart. So, what do you think, ETF chat fam? Is the XRP ETF a dream, or a disaster waiting to happen? Share your thoughts in the comments below, and let's keep the conversation going.